Hello, this is Pat Walker at MissionWinners.com, and I am doing a video for Mark. Mark asked a good question. Mark is a VIP member, and here's his question. I've been learning a lot in the last couple of months and been a member, and thank you. One area I'm not clear on is setting stops. How do you identify an initial stop and when to move it up? Regards, Mark. By the way, I want to stress this for everybody. I will only use your first name. I will never use your last name. Why? Out of respect for you and your privacy. Not that this is some top secret room or in our feed or anything, but that's just we do it. So Mark, that's a great question. Where do you put your initial stops? How do you do this? Well, let me show you a couple of examples. One of the things I constantly say is this. We focus on clean and simple chart patterns. A clean and simple entry will give us a clean and simple exit if we're wrong. So I'm going to show you a couple of examples right here. Here's a stock that was a keyless stock, TLND. You can see this tops right here. In fact, I'm going to slide it over. I like to do this when I teach the IBD meetup. Downward sloping trend line. If it pushes above this trend line, we'll buy it. And it does it right here. Now the volume wasn't heavy, but it did push through on average daily volume. You buy it pushing through the highs of this bar. The high of this bar is $50.73. So I say you buy it for $50.80. So you're buying it right in here. This is my tactic, is if I buy this, if this starts to fall back below this line, this trend line, this price break, I will sell off half my shares. You can say, what are you, crazy? No, I'm not. I've just done it enough over 3 decades that you find the best stocks push away in price. And the biggest problem you have is you don't get your shares. So this is why I am super hung up on clean and simple entries of low risk price patterns, because it gives me a clearly defined entry, but will also give me a clearly defined exit with a very small loss. I mean, a lot of people say, oh, Bill O'Neill talks 5 to 7%. If you dig deeper, you will find out that Bill O'Neill really strived for losses of 3 to 5%. That's what he was shooting for. And he'll say that. He said that. So we want even less. We want even tighter losses. With a super clean entry, if it pushes above the highs of this bar here, I'll show you. I'll back it up. Taking out the highs of this bar. The high on this bar is 50.73. The next day it opens here. It pushes through there. It marches on up. What am I going to do after I'm up $1, $1.50 or so on like $20, $30, $40 stocks? I'm raising my stop up near break even right away. I'm not going to round trip this. So let's advance this. Now it goes higher. Now it goes higher. It's walking on up the line. As it advances up, maybe we sell off 20 or 40% of our shares. All right? So we're in the trade. We've sold off 20 or 40% of our shares. It does this, a reversal bar on heavy volume. Maybe we sell off another 10% and get down to 50%. Why would you do that? Here's why. It gaps down, it runs up, it reverses and closes near its lows of the day on a big pickup in volume. What are we going to do next? We're going to watch the price action. It's an inside day on average or a little bit heavier volume. It starts to go up again. We let it work. And then you have this. All right. Now, I didn't know this was coming. I'm just advancing it day by day. Gaps down. Maybe this was earnings. Gaps down, drops like a rock. I have a philosophy. When I have a decent profit and it starts losing the 8th day, I'm selling off at least another percentage points or so and getting down to maybe 20%. And then if this keeps dropping hard, I'm selling the rest. You can say, well, God, I came back up. I don't know that at the time. I have a philosophy here. If I buy this for 51 and it's near 60, that's almost a 20% gain. I'm not going to let a 20% gain turn into a loss. That's the way I run it. There's one example for you. Let's do another one right here. PGTI, keyless stock, came through here, lifted through here. Oh no, this wasn't a keyless stock. This was one I was just scanning, okay, from a friend of mine. Lifted through here, and it starts to march up. What am I going to do? Just watch it walk up the 8-period exponential moving average. If it starts to lose the 8-period exponential moving average, I will sell some shares off. That's how we run it. I'm going to show you another example. SolarEdge, breaks out on heavy volume and starts to lift up, forms a pennant here. We sell some into strength on the way up. We always sell a little bit, if only 20%. Why? It allows us to have room to breathe. It forms this pennant. Watch this. It forms a pennant. It's right above the 8-period exponential moving average. You can see the pennant, and it's just simple rule. You can say, gosh, if it falls out through the bottom of the pennant and it starts losing the 20-day, maybe I'll sell some more. You have a plan. We have a plan. The next day, it drops down on a pickup in volume. It falls out of the bottom of the pennant. It falls down through the 8-day moving average. It does it on really heavy volume. It's getting close to my price. When it's doing something like this, you know what I'm doing? I'm selling more off and I'm getting down to maybe a 20% position. And that's it. Why? I'm not going to let a good profit. Hey, you're buying here near 58.80. And getting it up to near 71. I'm not going to take this all the way back down to my cost. I'm making money. And here you go. That's why we sell some into strength. So I'm watching the price bars. I'm looking for consolidation zones, and I'm watching the action with a simple pennant or a simple trend line and the moving averages. After I have a really large gain, I will give it a lot more room. I'm going to show you one more, Mark. Okay, this is very important. Square, and I'm going to go back in time to here. Square. I bought Square right here and watched it walk up the line and sold a little bit into strength. As it started going parabolic, I was tweeting, and you can go back and look. I was tweeting back in late November. This is going parabolic and it is not sustainable. And we sold off and we were down. At this point in time, I think we only had 30% of our shares left, maybe 40. That's it. When it starts to do this, because I was saying maybe we were only at 20, I can't remember, but we were selling into strength. When it gapped down and started cracking through the 8-day reel here quick, that was on volume with the parabolic move, it was gone. So that's how we do it. We monitor it. We watch the price action on the moving averages. But the best moral to this whole story is this. Look for clean and simple bases that it pushes away. Everybody, look for chart patterns that everybody sees. It increases the odds that they will act on it. I know this went a little longer than it should have, but I want to do it justice. Mark, thank you for asking the question.